So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum as a price ratio to Bitcoin should recover to its prior, let's say, either average or at least 5-year highs, okay? Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year. But I do think Ethereum is going to exceed those prior highs. And that's why I think when we get to 12, 15,000, that's what you call, real price discovery. But I don't think that would be the ceiling for Ethereum. An intermediate level for Ethereum is matching Bitcoin's network value. So I think a couple years from now, so that would be 60,000 ETH.
As institutional money floods into digital assets, Tom Lee is making a bold call. Bitcoin and Ethereum are entering a new era of unstoppable growth. Ethereum continues to make waves in the crypto market, and its trajectory has investors and institutions paying close attention. Currently trading near $4,480, the network is seeing strong support from nearly $547 million in ETF inflows this month, coupled with heavy whale accumulation. Ethereum is poised for a potential 10 to 15-year supercycle, positioning it as one of the most undervalued plays in crypto today. While Bitcoin has long captured headlines as digital gold, Ethereum's fundamentals now make it equally, if not more, compelling for investors seeking growth and utility. Several catalysts are driving Ethereum's momentum: the explosive rise of stablecoins, increasing U.S. political and regulatory support, and Wall Street's embrace of Ethereum as a neutral, public blockchain. Its infrastructure is rapidly becoming central to tokenized assets, AI-driven economies, and machine-to-machine transactions, solidifying its role as the backbone of decentralized finance. On price forecasts, Bitcoin could climb to $200,000 to $250,000 by year-end, while Ethereum may reach $10,000 to $12,000 in 2025, with potential to break into $12,000 to $15,000 as it enters true price discovery. Longer term, Ethereum could even rival Bitcoin's network value, hinting at a possible $60,000 ETH. With these dynamics, Ethereum stands as a transformative force, redefining the future of digital finance. Get ready for crypto's next big surge. Subscribe and turn on notifications so you don't miss the breakout.
Yeah, in fact, it's been 10 weeks. So it's been less than 90 days. But it's been a lot of work because, BitMine is on a mission to become one of the largest crypto treasuries in the world, but also have a beneficial impact on Ethereum. So there's a lot of strategic planning that we do constantly and a lot of thinking through markets and communication. So it's been busy, but it's been a lot of fun. I wouldn't blame anyone being surprised because we've been writing about Bitcoin since 2017 when it was under 1,000. And at that time, we posited that institutional investors would want to own Bitcoin because of its status as digital gold. And today, that's really the mainstream narrative. But this year, myself and Mosaics, who helped me engineer this BitMine transformation, we started to see the possibility that Ethereum was entering a supercycle, something that would last 10 to 15 years. And if that was true, we'd want to have a role in actually helping sort of guide Ethereum and traditional Wall Street onto Ethereum, and that's why we did the BitMine strategy. In our view, Ethereum probably is a chain that had become underestimated. It made its all-time high 5 years ago. So when we started the treasury strategy, Ethereum was around 1,300 and its all-time high was around 4,800. But that was a case in our minds where Ethereum's fundamental story was much stronger because number one, it is the second largest blockchain. It's the largest smart contract platform. It has a huge community of developers that, in my opinion, are really benevolent focused. Ethereum is trying to improve the world. But I think people thought of it as less exciting than other platforms. But then along comes not only stablecoins, which we call the ChatGPT moment for crypto, but it's really the realization that this current administration in the U.S., the White House and Congress, are really becoming pro-crypto. And Wall Street itself is embracing blockchains. And the blockchain they're doing most of the work on is Ethereum. So When I look at that combined with AI and tokenized agentic AI and robots are really going to create the need for like a token economy for robots. A lot of that will happen on Ethereum. In fact, President Trump today just talked about how he needs proof of human to protect us, and a lot of that work is going to be done on Ethereum. So you have two drivers for what we think are a supercycle. So to us at 1,300, Ethereum was kind of like a massive risk reward. Well, it's a big market. I mean, stablecoins are just tokenized US dollars right now. But we're going to be seeing tokenized equities and credit and real estate and loyalty points and intellectual property. Intellectual property is the largest component of US CapEx. That should be on chain. So is it a $400 trillion market? And stablecoins are 280 billion right now. I think that there's room for plenty of blockchains to benefit. But I do think the idea of a fat protocol is important for people to keep in mind. That's what Union Square Ventures first wrote about. I don't know if you guys remember from 2011 or 2013, but as stablecoins are created on a layer one, that layer one captures the value. That payment rail concept is the exact same reason banks, as you put a deposit in, the value of the company actually equals your deposits because they make a loan with that deposit. So I think in many ways there'll be room for many blockchains, but the majority of this is taking place on Ethereum. Yes, and I'm not going to throw shade at any other layer ones because I do think there's room for multiple, but Ethereum is a truly neutral chain. I don't think anyone ever feels that someone's got a fat finger tilting it in their favor. If you think about how Wall Street operates, they will only want to do and operate on a neutral chain. If one of the banks creates their own layer one, calling it, I don't know, too big to fail bank layer one blockchain, no one is going to feel that's a neutral blockchain because that's going to always tilt it in their favor. I mean, that's just how Wall Street operates today. If a bank is the axe trading a bond, they have perfect information and they use that against anyone else that trades it. So I think it's important for Wall Street to find a public blockchain that's neutral, and today the biggest one is Ethereum. Some perspective, in 2017, Bitcoin was under 1,000, and we thought it would get to 25,000 by 2022, but could get to 100,000 a little bit later. Of course, 8 years later, Bitcoin's over 100,000. To us, an intermediate level for Ethereum is matching Bitcoin's network value. So I think a couple years from now, so that would be 60,000 ETH.
As Wall Street's appetite for digital assets accelerates, Tom Lee sees Bitcoin and Ethereum not just as investments, but as the twin engines set to power the next era of global finance. Bitcoin and Ethereum continue to capture the spotlight as digital assets shaping the future of finance. The rise of the digital asset treasury model bridges crypto and public equities, where institutional investors focus on the most liquid and widely traded names. Bitmine, trading nearly $3 billion daily, has become one of the most liquid equities globally, a critical factor in attracting Wall Street capital. Ethereum is emerging as the new Wall Street, powering tokenized assets, synthetic finance, and decentralized applications. Unlike Bitcoin, which remains digital gold, Ethereum is positioned at the center of the evolving financial ecosystem. Its role in DeFi, tokenization, and machine-to-machine transactions mirrors the transformative moment in 1971, when Wall Street created synthetic financial products after the US left the gold standard. Looking ahead, Ethereum could climb to $10,000 to $12,000 by the end of 2025. With the potential to break into the $12,000 to $15,000 range as it enters true price discovery. Institutional demand, growing liquidity, and regulatory support are key drivers of this growth. As Ethereum solidifies its infrastructure and market dominance, it is set to become a central pillar of the digital economy, complementing Bitcoin and shaping the next generation of global finance. Let's get back to the interview.
Yes, I think part of it is the digital asset treasury world bridges two worlds. One is crypto, because it invests and buys a token. And so you have to be able to speak the language of the crypto economy. But then the other world that treasuries sit in is public equities. And remember, there's 5,700 stocks out there, 5,700. I mean, like, so just because like a company does something doesn't mean the market cares. If you look at the stock market today, the top 30 most traded stocks are literally the only stocks that Robinhood cares about, or Schwab, or even JP Morgan. You know, like JP Morgan trading probably only cares about 10 stocks, and Goldman's desk only cares about 10 stocks. Institutional investors care about sector exposure, but they always buy the leader. So, you know, MicroStrategy is one of the most liquid stocks in the market today. It trades $3 billion a day. Fortunately, BitMine is one of the most liquid stocks today. It trades about $3 billion a day. It trades about as much every day as JP Morgan or Arista Networks or Google. We're really one of the most liquid names. And then I learned that in Korea, we're top 1, 2, or 3 in terms of trading volume. So I think that unless you're going to break into the top 30 as a stock, institutions may not pay attention, because institutions want to have volatility, access to hedging through option chains, and BitMine's a top 10 chain. And so if you're not in that zip code, institutions aren't going to pay attention. Michael Saylor is a very good friend of mine. In fact, you know, I spent a lot of time explaining to him and thinking around Ethereum and Bitcoin, and I think we agree Bitcoin and Ethereum, first of all, are friends. We don't compete. But that our strategy is very different. You know, I'm not competing. BitMine is not trying to get an institution to buy us over MicroStrategy. In fact, we think an institution that owns MicroStrategy also has to own BitMine, because we are different parts of the crypto economy. Ethereum, to me, is the new Wall Street. You know, in 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. It no longer was backed by anything. And that's when Wall Street stepped in and said, okay, we got to make sure that the euro, or, well, you're doing the German franc or whatever, German mark or the French franc doesn't become dominant. So Wall Street built products to make sure everyone used a synthetic dollar. Wall Street was the big play in 1971. In 2025, we're making everything synthetic. We're starting with tokenizing the dollar. And then, as you know, Wall Street's going to tokenize equities and everything I just listed. Massive opportunity. Ethereum is in a supercycle because of that. But BitMine can play a role, because it can become a payment rails. It could become almost a bank. It can help as by owning, you know, the largest holder of Ethereum today. It's a kingmaker on the DeFi. We were doing moonshots. We invested $20 million into 8Co, which is investing in the WorldCoin, and that already, in just less than 10 days, has already returned more than 10 times our investment. So I think we are becoming a financial infrastructure company. Ethereum treasuries to be differentiated. I do think there's room for more than one, but the market is also picking winners and losers. BitMine trades $3 billion a day. MicroStrategy trades $3.4 billion a day. I think the two of us represent 95% of all trading volume in the DATs. So if you look at the hundreds of DATs, the two of us are 90% of the trading volume. That means institutions really only want to buy us. You know, in terms of total market cap, you know, we are basically a large cap stock now. So we're going to be part of a lot of these major indices when they rebalance, which means we'll have passive flows. That really helped MicroStrategy too. And that's actually what sustains valuation premiums, because now you have someone who's buying every day. Well, a lot of it starts with our views on crypto. And, you know, I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin's strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year. But I do think Ethereum is going to exceed those prior highs, and that's why I think when we get to 12, 15,000, that's what you call, real price discovery, but I don't think that would be the ceiling for Ethereum.
Ethereum's meteoric rise from a niche smart contract platform to a core financial infrastructure highlights its transformative potential in the global economy. With its ability to support tokenized assets, decentralized finance, and synthetic financial products, Ethereum is positioning itself as the backbone of the next-generation financial system. Growing institutional participation, robust liquidity, and favorable regulatory developments are fueling adoption and long-term value creation. As it continues to expand its ecosystem, Ethereum is not just complementing Bitcoin but establishing its own dominant role in digital markets. The combination of innovation, scalability, and market recognition makes Ethereum a central force shaping the future of finance and investment strategies worldwide. Could Ethereum surpass Bitcoin in influence and become the dominant force in the future of global finance? Crypto moves fast. Comment your thoughts, share with your network, and subscribe to catch the next wave before it hits.